Even though Bitcoin is boring everybody to death with about 130 days of sideways price action without any resolution, although that is happening, take a look. It's almost to the end. Something's got to happen. And this purple line right here, even though my Cosasverdes stuff might be in the way, but this purple line behind me, that is when the month of October closes. So in very general terms, we have a few things to think about. Let me put my Harry Potter cloak back on. It's possible that when Bitcoin breaks out or down from this triangle, that will spell continuation somewhere around this line. You also have the possibility of a trap up before the other way happens, or a trap down to this origin line, perhaps even as low as 16.8 before it then goes up. All right, so let me put a couple price tags on. And there are a couple ways you could play this or interpret this. So let's say between these 2 points here for a bull trap and right around here for a beautiful bear trap. So if one were to see this breakout and you are long that, around these 2 points would be a good time to potentially begin taking profits and moving stop into well into profits, right? Maybe not flipping short at that time, but in doing that. Or if you play this to the downside, conversely to that or inversely to that, you would want to begin moving stops fully into profit on your shorts and or taking profits for likelihood that it does bounce from here to some degree, even though it could just get come back up to 18K at the bottom, get rejected, and then head down even lower. And so there are a couple ways to play that as if it were continuation. Stay safe, even if it's a trap. Does that make sense? So if it breaks up and out, you're going to have some decent sized wiggle room. So let's say from the top of this, I mean, hell, to 21K, that's a 7.5% move. That's more than enough for me to trade. I like to trade 2% moves, really, with this sideways choppy action. Right? So even if it is a trap, you can trade it as if it were continuation very safely and profitably. And this is not financial advice. I'm not a financial advisor. I'm letting you know what my thoughts are. So let's take a look at some pivot points and see if anything's new. But what I can tell you, by the end of this video, I'm going to show you a chart that you won't see anywhere else on the entire internet, because I made the chart. But it might be among the most important charts of all of crypto. So let's go get some friggin' Bitcoin. How boring this is. All right, so boring looking. Let's jump into this chart. I'm going to start off by letting you know from a micro time frame perspective. And again, these are the levels that I'm tracking on my live chart, my live Bitcoin stream chart that I have available to all of my Discord community, both tiers, and my Cryptillion, the higher of the two YouTube tiers. So what I do here is I try to let folks know just pretty much everything that's in play. And what in play means is those are micro pivot points where if you go down to it, you could get a bounce, or if you pass a level and go up to it, then you're going to hit your head on it. Or if you just go up to a level, then that's going to be resistance. It's everything in play that are the bumpers. So if you imagine a pinball machine where the ball goes and the little things that you got to hit it with. If Bitcoin price is the ball, these are all the bumpers, right? And I usually am pretty accurate with identifying what actually is in play and what will move price one way or another, even if it's just a little hesitation on micro timeframes or not. But I'm going to zoom out just a little bit more so you can see what is more immediately in play. And I would say less than that. So most immediately in play over the next day or two is everything that you can see on the screen right now. Perhaps we could take off the daily closure. But we have a trend line from the highs of October 4th going back. See that? So this is very, very, very much in play. It's what a lot of people are staring at. the daily 21, the daily 10. If we zoom in to the 1 minute chart, we can see that it's clearly partly what's in play. This is a 1 minute chart. Hit the October open candle, failure rejection pattern on the daily 21. Come try to base out on the orange line or the daily 10. Get rejected again, breakdown from the October open, went below the daily 10, spiked back above the daily 10, got rejected by it. So like all this stuff is what's in play. And if you want to put these items on your chart, it would probably be a fantastic idea. And it's very possible everything on my chart right here is everything that will remain in play. Like I would almost guess that over this entire week that Bitcoin won't go off this screen. Like that's a pretty probable scenario. So if you literally just have this stuff on your chart, it might get you a whole week. As weird as that sounds, and as unfortunate as that sounds, because it's going to mean a lot of boring, that could be the case. And my main guess from my Monday video on October 17th was sideways price action with a possible bull trap up that's closer to 21K and change, and then break down out of the triangle perhaps in November or around the monthly candle closure just after. So that's my main guess. And so from a micro time frame, so that's a midterm time frame guess. A micro time frame, I mean, this kind of supports it. It looks like it's going to stay within this area for the next several days. And if you want to envision this a little more easily, my main idea is that since the October open, the October monthly candle open is essentially the battleground right now. And you can see that we are, we're more than halfway through the month. So a lot of times when that happens, you will see that even through the end of the month, there is still the battle for that line. And you'll often see in the last 1 hour. So that 1 hour is always at 7 p.m. New York, going to 8 p.m. New York, right? On the last day of the month, whatever the 31st falls on, whatever day, even if it falls on a weekend, it doesn't matter. A lot of times Bitcoin at that last hour, if it's above, it'll fly down to it and then close somewhere close. Or if Bitcoin price is below it, that last 1 hour, an hour and a half or so, it'll fly above it and close, close to it, either above or below, to make, to essentially, like, it could end up being a doji candle, right? And if you go on a Bitcoin chart and just look at the monthly candles, anytime you see a doji month, a really thin body candle, that's often what happens. A lot of times it goes down to the last hour, and if you expanded that month down to the 1 hour time frame, you'll see that a lot of the month there was a battle exactly at that line, and this is cooking up to do the same. Because we have a descending triangle and a stock market that has been making regular lower lows on price, both NASDAQ composite and S&P 500 composite, I would say that there is a much better chance that Bitcoin breaks out of this triangle or breaks down from the triangle sometime just before the October candle closes or sometime just after November candle opens. But then again, you got to watch out for that bull trap up to 21K that I talked about at the beginning of the video. But to get you through the rest of this week, or till Friday, everything right here behind me, it easily could get this. So if you're a new viewer, this is when you pause the video and you go put the stuff on your chart, try to emulate what I have. And if you are not sure how to put on daily EMAs, you can go to indicators and you look for the ones that are MTF EMAs, and you could mess around with them. They all have similar functions. All right. And since Bitcoin is moving pretty much sideways, I would say that a move up to 20K. So now we're going to go over the when probabilities flip, right? To perhaps hit the top of this screen or the bottom of the screen. Because right now it looks like it's just going to stay close to the October candle. So let's make October candle as our middle point. So if you're close to here, then you don't have a great edge either way. Make sense? So we're kind of close. since we're under it, yeah, it's a little bit more likely that 19K will be hit before 20K up here, just because price is under it. However, the probabilities begin, but it's still close to 50-50, right? And for every, I guess, for the lack of a better, for every $10 above here, that slightly increases the chance that 20K will, the move up will be hit. But when do you get a tradable edge? So a tradable edge up to 20K and perhaps farther, up to the top of the bigger triangle that I showed at the beginning of this, is I wouldn't just say you have a tradable edge right when it peaks its head, right when Bitcoin gets above this line here, which the price is labeled here, roughly 19,380. Rather, it's going to have to do with this trend line formed from the October 4th highs down to the other spikes up that we've had. So this is October 14th. And I think what might happen here is when you'll have a tradable edge, Bitcoin will both get above this, come back and land and make a higher low to this, and then start wiggling up and get back above this. That is when, but it's only after you stick it sticks its landing here or on this. So you need to stick a higher low landing and then start moving up. And it's at that point when it's then moving up after finding support, I think you have a tradable edge to the upside. Now, that is different than price going above this and just going straight to here. I don't know if that's a tradable edge in that exact moment because there hasn't been the retest yet. Does that make sense? So it'd have to go above, come back, use that support, and then start working its way up at that moment. So let me draw this out. So at this moment right here, I wouldn't like that. I wouldn't like that edge. I would want to see it come down, either stick a higher low here and work its way up, or stick a higher low there. Something to that effect. And when you start getting, so if you were to zoom in, like on the 5 minute, after you see either it stick its landing on this trend line or on the October open candle, once you get, 5 minute uptrend or a 15-minute candle uptrend and you see a higher low and then it starts, attacking the most recent local high at that moment right here. Oh, so this is the exact moment right there that I would say there's a tradable edge to the upside once it gets over this high here after sticking its landing on these two items. Make sense? Right here. Not here. Not here. Not here. But once it gets over the most recent local high. And that's when you have a tradable edge up to 20K. To the downside, I mean, it's already so close to 19K. I don't know what the risk, you got to look at it like this. The risk to reward ratio is not very good. You got a 1.5% move down. So even if you did get a tradable edge to the downside, it's not that much. So I wouldn't favor this as much because I don't think this greater triangle is going to break out or break down, anytime super soon. Because SPX and stocks had a pretty good, fairly good day, fairly good closure. So I don't see this breaking down. So if Bitcoin goes down to 19K, 1.5% below current price, I don't know. I don't think it would go much lower. I don't think it would hit the bottom of this triangle. Making sense? And what else do we get? However, tradable edge to the downside. If Bitcoin does do that, and then I would wait till market open of traditional finance the next day. If Bitcoin overnight does hit this for a third drive down and then comes up and starts getting rejected from this, forms lower high, and then takes out one of these lows right here, you're roughly in the same boat you are now, but that would be another tradable edge to the downside. But this structure right here, you start getting a really tradable edge to the downside once you take this out, but it's just not much room to go. So, that's less than 1% down to 19K. I just don't think it's worth it. Even though your edge would flip, I just don't think the risk reward ratio is good because the reward my calculation of the reward probably wouldn't be that great. And Bitcoin's just going sideways. So let me show you that chart that I think could be the most important, potentially the most important chart of all crypto and how I am interpreting it. And again, you're not going to see this chart anywhere else because I made it. And here we go. Put on the rainbow ribbons for some visual cues. So look, so this is Bitcoin versus S&P 500. 130 days of total consolidation, which is the same as Bitcoin has, just normal Bitcoin price has been. It's the same thing. 65 days as a downtrend. So what this portion right here means, this red portion, and let me take off the rainbows now. So what this red portion means is every time S&P 500, or in general, every time the S&P 500 made some type of low, Bitcoin made a low slightly more aggressively. For example, from here to here, if S&P 500 had a slightly higher low than its previous low, Bitcoin made a slightly lower low during this time. And during from here to here, if S&P 500 moved up several percent, then Bitcoin did not perform well against it for its typical average. So I think the average that Bitcoin, I don't quote me on this, but it's somewhere close to 2.5x. So if S&P 500 moves 1%, if this chart is essentially going sideways, like the universal constant, or some universal constant, maybe not Planck's constant, but you know what I'm talking about. The litmus test, the baseline. Bitcoin often will go 2.5%, right? So during this downtrend, what this means is Bitcoin could have been going up the whole time during this from this point, from point A to point B, but S&P was too, and Bitcoin did less than 2.5x. The movement of S&P. Does that make sense? So this doesn't just mean Bitcoin was going down that whole time. It had less aggressive highs versus SPX's move up, and every time SPX made a higher low, Bitcoin didn't make as good of a higher low or made a lower low. And if SPX during from point A to point B made a lower low, Bitcoin made a much lower low. But something changed right in the middle. You had 60 days of a fairly aggressive uptrend. And this is when, so starting at around this point is when SPX began making lower low after lower low after lower low. So take a look. And I'm going to get to the whole point of why this is important here in just a minute. So starting, about right here. So May 2nd. This is SPX. Lower low, lower low, lower low, lower low, lower low, lower low. Over and over and over, right? With a rally in the middle. So let's go to, is that roughly, or maybe it started here. It either started around May 2nd, or it started around August 25th. Let me see where that was. Second. Nope, it was the August one. Yep, so this is August 22nd. So my first guess was right. That's when this uptrend began. And you saw that during this time, S&P 500 made local low after new local low, which essentially are yearly lows. Right? Because it's every local low is a yearly low for SPX now, right? But this entire time, Bitcoin held onto its lows. It has not gone under 17.5, which happened in June back here. So the S&P 500 was making lower low after lower low after lower low, and Bitcoin did not. It literally, just look at the freaking triangle. It held its lows as S&P went down and down and down and down. Not aggressively down, but it went down. Now, here's why this chart is so important. The trend has changed. Back here, it bounced off of this line. It only took out one higher low. So oftentimes, even on normal price action, Bitcoin versus the dollar, you'll see that a lot. Because there's a lot of liquidity, people hiding stops and stuff like that, and it allows market makers to take on larger positions because all those stops form liquidity, or liquidation points form liquidity for them. Liquidity just means they can take on bigger long positions, for example. So you'll see this a lot on Bitcoin since 2019. Prior to 2019, that shit didn't happen because hedge funds and traditional finance did not have their algorithms hooked up to Bitcoin at all. And so this is not horrible, taking out one low, but look, higher low, higher low, higher low. It has now taken out 1, 2 higher lows and is tinkering with. Let's see if it's actually taken it out. It did. Let me make a horizontal line there. So not on a closure basis, but it took out that low. So it's taken out 3 higher lows. So the trend has, you have a lower high. So high, lower high. And you've taken out 3 higher lows. So not only has the trend reversed, it has reversed, but fairly aggressively, all at once. Look at this. It just honestly looked like it was consolidating to break out. Look, even had a fake out up right before it went down. And that this kind of shit. So even though this isn't Bitcoin versus the dollar, this type of consolidation, fake out, breakout, then tank down, that also is a hedge fund / traditional finance algorithm thing. Trick other players, whether it's less sophisticated algorithms or just retail people, but it's the same concept as what I talked about down here. More liquidity. You grab the stops and the liquidations and then take it the other way. So you can load up on bigger positions if you do that, right? So what this means is this. And here's why this could be the most important chart in crypto. Remember, I began this video by saying 130 days or whatever I said at the beginning. It's roughly 130 days of sideways price action in a triangle. And it's just pure sideways. Like, how can we get a tip on when this shit is going to get resolution to the upside or the downside, right? Well, this is a fairly good indicator that it's much more likely to break down. Not only are we in a bear market, but it's a descending triangle in a bear market, which adds to the increase of it breaking down. But because Bitcoin is now under, or relative to Bitcoin's previous performance to the stock market, Bitcoin is underperforming SPX. If it stays down here or just can't make higher highs and higher lows again, if it continues going, if it does one of these numbers, then the next time SPX starts making new lows, which is inevitable. I don't think the bottom's in. That means Bitcoin, that is when Bitcoin will fall out of that triangle. Is new lows on SPX. If you don't see a change on this. So what could happen is, right when SPX begins making a leg down, this trend starts changing and it gets above here, and okay, Bitcoin holds on to its lows and there's just more sideways, right? Potentially. But this is a definite warning shot, and you won't find this anywhere else. And so we're going over this fairly heavily on my Discord. We just talked about this on my VIP Discord call. And again, links to the Discord with visual instructions on how to check it out in the description section. All my videos, the YouTube tiers, you can click the join button right below the subscribe button on my recorded videos, and a 90-second video pop up telling you what they offer and how it's different than Discord. And then Twitter, make sure you follow me there. I post some bomb stuff on crypto. Cosasverdes with the number 2 afterward. And the rest of this week, I'm guessing more sideways, unless we get one of those, especially the initiator up. So the initiator up is what we discussed earlier, Bitcoin getting above the October candle. Actually, let me go to Bitcoin price. Wrap up here. Take a look. This is the initiator for at least a move up, not out of the triangle, but closer to the top, is you get above the October candle and this descending trend line, get above it, use it as support, then start wiggling back up, you make a uptrend on the 5-minute or 15-minute chart, that would be your initiator up. And to the downside, because that special chart I just showed you has broken the downtrend, your initiator to the downside is not so much Bitcoin price necessarily, but I think an even better initiator of that is new lows on SPX if that chart hasn't changed. And that is when your probabilities instantly flip hard to the downside. But it's a two-pronged thing. SPX needs to make new lows, and that chart, the special chart, needs to continue not making higher highs. It needs to stay in that downtrend. And that would be your initiator to have a very favorable edge trading short. Hopefully this was helpful.